What's up, everybody? Erik here. Welcome back to another Top the Outlier podcast. And today I have my favorite green chicken here with us, our friends from Doomberg. First off, welcome, and thank you so much for joining us.
Erik, great to be here and looking forward to a fantastic discussion.
Yeah, well, so we got to start with the chicken in the room, which is, what's the genesis of the chicken?
Yeah, sure. The green chicken is well, first of all, I'm the head writer of a small team that publishes the Doomberg Substack. We launched it 2 years ago, coming up here on May 3rd, our 2-year anniversary. And we built this brand, from scratch. We had no social media presence whatsoever. We were, again, a small team of consultants from the commodity sector, focused on energy, finance, private equity, venture capital, crypto. And we decided to get into the content creation business after having consulted in the space for about 18 months. And, when you start from nothing, you have to create something. And many of the bigger content creators, the brand is the face, is the person. And that was not something we could do because A, we weren't a person, and B, we had no pre-existing social media to build from. And so we decided, the old adage of marketing is you can't be remembered if you don't stand out. And when we had our sort of initial brand brainstorming sessions, there's a whole market for sort of doomerism or doom porn, or pick your favorite sort of descriptor for it. And a lot of it is sort of superficial and clickbaity. And we decided that there was probably a niche in the market for a bit more sophisticated doom, a little better written, a little better edited, a little better research, show our homework. And we love our Bloomberg terminal. And so as we were just sort of brainstorming, Doomberg sort of just came out of it. And then the concept of Chicken Little getting a terminal and scrolling through the Bloomberg machine looking for headlines to be afraid of was one of the sort of riffs that we did as a team. And we found this cheap clip art. Anybody can find it, the green chicken with the stunned eyes. Well, it's just a chicken with the stunned eyes, and the clip art that we purchased. And then we colorized it with, some of the colors from the Bloomberg keyboard and stuff just to be fun. And we just launched it almost as a bit of a lark, and took off beyond our wildest dreams, and went paid a year ago. And now we're, the number one paid finance Substack in the world, and amongst the top on the platform across all categories, which is, crazy, stunning, humbling, life-changing, thrilling. One of the things I'm most proud of is the team has taken the time to savor the success. We've not taken it for granted. We don't suffer from the disease of more. We've achieved way more than enough and way more than our wildest dreams. And we have, us and our families have been proactive and conscious about waking up every day and like pinching yourself and savoring the reality of having achieved something that we're proud of, that our kids are proud of, that helps support our kids and our families and friends and charities and things that we're passionate about. And so it's been really a remarkable journey. Couldn't do it without our subscribers. And we are, 100% subscriber supported, and every subscriber is precious. And so, yeah, it's just been a real whirlwind. So, yeah, it's crazy. But yeah, once you build something like the green chicken, you can't de-anonymize. Like we were talking before we came on the air, like many people on Wall Street know who we are. It's not a big secret.
Right.
Substack knows who we are. When we meet with Substack, we meet as ourselves. Stripe knows who we are, obviously, for KYC, AML purposes. Our bankers, who help us with the sort of business aspects of things, heard our business plan before we went to paid, and they know who we are, obviously. But if you de-anonymize, you sort of destroy the brand mystique. And so even if like people guessed who we were or tweeted who we were, we would just ignore it because you just can't acknowledge it. And you just, I don't want to destroy you don't want to pop the green chicken bubble, and it's been such a good ride for us that we're honestly in sort of protect mode. Like we wake up every day, make sure we don't do anything wrong. And then just keep doing all the things that have worked for us. And so that's the story of the green chicken.
Yeah, it's awesome. I love it. And a couple of following questions there. So was your team, did you all like work together for another project before you pivoted over to Doomberg?
Yeah, we had a bespoke consulting firm where we catered to C-suite executives and family offices. And our sweet spot was a family office in a commodity space that was sort of running a business, needed to get unstuck, and they would bring us in, and we would sort of think laterally and leverage our multiple decades of experience in the commodity sector as executives to unstick, certain businesses and unlock value and make money. And we had developed a very good book of business, and then COVID hit. and we lost 85% of it in the span of 6 weeks. And like every small business owner, you have we call it a high pucker factor moment. Like, what are we going to do? Do we go back to get a job? Do we reinvent ourselves? Do we fold shop and go our separate ways? And we decided to stick it out. And a very famous hedge fund manager who I personally had called to get some advice as to how we might go forward and how we could rebuild our business said, there's this whole area of content creation that serves Wall Street, where the content creators are super talented, but they don't have your business training and sort of execution and discipline expertise that I've come to know of you. And maybe you could build a book of business helping content creators run their businesses better. And we did that. And we got very next phone call, a high profile client that we helped a lot, and we're still very good friends with, one of the few clients we've kept. But to answer your question, we had a small consulting firm that was successful. Then COVID hit. Then we had to rebuild ourselves like many small business owners. And that 85% kick in the what was the best thing that ever happened to us in hindsight, because while we had a good book of business, it wasn't really our passion. It was fun. It was good money. Proud of the work that we did, proud of the clients that we had, proud of the clients that we've kept. But since starting Doomberg, we've turned down all new clients and trimmed down the existing clients. We've decided to keep just the very core. And Doomberg has swamped that business. To be totally transparent, it's really been, eating what you kill, kind of, as an entrepreneur, and the beautiful thing about the subscription business is we could get another 1,000 subscribers this week and it wouldn't really create all that much incremental work. So it scales. We'd still be publishing 6 to 8 pieces a month, and we'd still be doing our podcasts and still doing our tweeting. And now, of course, working on Notes, Substack's new Twitter alternative. But it's also, none of this feels like work. It's a really amazing blessing. We have a bunch of phrases we use around the office. The chicken coop, we've since bought an office so that we could sort of consolidate ourselves into a really great work environment. And one of the most important metrics that we measure and hold ourselves accountable to is every week we take a look at our schedule and say, how much of this was stuff that we had to do versus how much of this stuff is things that we got to do. You feel like, I get to do that, but I have to do this. And we call it our get to have to ratio, and we want to drive that to infinity. And so with the financial success of Doomberg, we've been able to outsource many of the have tos, and we keep isolating and optimizing our lives to only focus on the things that we feel like we get to do, which actually makes us far more productive. Because when you're in I get to do that mode and it doesn't feel like work, you could sit at your desk from 10 in the morning until midnight and look at your watch and not know what time it is. And getting into that mindset, that peak performance mindset, for something as silly as the Doomberg, Substack, but it's not silly to us. Like, we eat, live, breathe, sleep, dream, this business. And we poured our hearts into it. And, we just had a multiple family celebration over spring break.
Oh, it's awesome.
And our subscribers wouldn't know it because we never miss a beat. We always publish at the same cadence. Our subscribers come first. We pre-wrote a couple of pieces ahead of that vacation that we all took. And, because our objective is to delight our clients. And as long as you focus on your ideal clients and obsess over delighting them as a small business owner, it's pretty hard to fail.
Actually, just really important wisdom, I think, even for me as like a new content creator, right? Like, I'm new to all of this. I started a little bit before you guys did, right during COVID. But I did not start in the content creation business. I was just trying to like share information with like my veteran friends, and I was repeating myself a lot. So I made some videos, so that they could watch and then we could talk. But I mean, a lot of what you're talking about there is actually just really interesting content creation information. So another question I have is, when you think about the world of economics, what keeps you guys excited about it? Why is that your niche?
So in the subset of economics, our niche is what we know, which is commodities, energy, and related. And of course, we also have a pretty strong finance background on our team with, private equity and venture capital, and combination of those things, which is what we were doing in our consulting business, which is sort of helping unlock value through private investments or advising C-suite executives like, hey, here's the technical assessment of this opportunity, here's the financial assessment, and here's why you shouldn't do it. Because it's likely to burn your money, or here's why you should do it, and so that it's really fun to sort of we sort of specialized in distilling complexity. So like I remember a client hired us because they had a really tough environmental problem that the internal team really kind of got stuck on. And we have a pretty strong science background. I in particular, manage pretty large teams of PhD scientists working on alternative energy for many, many years. And so I have a pretty good molecular map of how the economy actually works. And those are the types of problems where you dive in and you read through 5 years worth of internal reports and you say, aha, here's what they've missed. And you should look at this. And then all of a sudden the whole team sees a problem from a different angle. That was super fun. We've taken all the fun parts of that job, connecting dots, pattern recognition, explaining scientific concepts to finance professionals in a language they can understand. All of those things are sort of wrapped into the Doomberg brand. And key element of our brand, again, is delighting our ideal clients. We actually have, I was listening to your origin story, which is actually very common for many content creators. And really what it comes down to is that pivot from doing this for fun to doing it professionally. And so when you ask me what gets me excited about the economy, is the fact that we now have a professional outlet for our work and thoughts and writings in that regard. And the economy is so dynamic, and the energy sector in particular is so dynamic, that we just published piece 187 this morning, and we have never run out of things to write about. Right. And I don't think we ever will. And so the thing that excites me the most is the dynamic nature of it, the ongoing need for pattern recognition and the distillation of complexity. And that we have found personally, this is what I was meant to be doing in life. And what a gift to wake up every day knowing that after 20 years of school and 20 years plus of working and many, many years as an entrepreneur, experimenting with various business models, that you land on the thing you were supposed to be doing. You catch the tiger by the tail, and we just don't let go. Like, we're not going to do anything else. We wrote a piece, one of the Work of My Life pieces, where we talked about the disease of more.
Right.
Like, we've been offered all kinds of things, Hey, sell me your email list. I'll make it lucrative. Or, you should write a book, or you should do this, or we're going to do none of those things. We're going to show up, make our numbers go up, and repeat. I mean, that's what we're going to do. We're going to write our pieces. We're going to grow our Twitter following. We're going to grow our free email list. We're going to grow our paid subscriber list. We're going to nail every podcast invite that we get. We, by the way, put in all the work and show up and be professional and treat every podcast like your business depends on it, because it does. That's one of our phrases here. Like, we want to be the very best podcast guest we can be, because what a great engagement, in the customer journey from impression to engagement to email to paid. There's no stronger engagement than the people listening to you and I talking right now. And maybe some of them will think, wow, hey, this Doomberg is worth checking out. Let me go to their webpage. And then some of them will eventually sign up, and some of them might actually pay. Like, that's the way this business works. And so we want to be professional about it. We want to be serious about it. And there's just no shortage of fascinating things. When you research, write, edit, and publish, and promote, and defend 187 pieces, you learn a ton along the way as well. So just think of the institutional knowledge that we have built up inside of our very small firm. If we ever wanted to restart our consulting business, man, how powerful would we be given all the things we've written, researched, and published and defended? And one of the things we do after every piece is we go thoroughly through all the comments, which are closed to just paid subscribers, but they're having to defend it or learn something new, or have you thought about this angle? Like, it's all part of that continuous improvement learning journey. So that's really, to answer your question, the thing that excites me the most is that there's just an unlimited world of learning potential for us to dive into.
Yeah, I love that. And I think, at least from like a retail trader perspective, a lot of my audience really enjoys trading for very similar reasons, because you get to learn about the world from the lens of finance, which I always kind of find refreshing, because you lose a lot of the partisan stuff in some instances, and it's more about dollars and cents. And for a lot of people, that's like an easier way to consume the world. But when you look at kind of the state of the economy right now, what are some of and I want to get into commodities and energy, but kind of zooming out one level first to start. When you look at the state of like the US economy first right now, what are some of like the primary themes that you're keying into?
The thing we're watching most closely is deposit outflows from regional and community banks. And this is something that we believe is being perhaps underestimated by the market. Now, full disclosure, we bank with a very small community bank. We know the sector pretty well, and we're very passionate about the critical importance of regional and community banks to the real economy. If you sort of divide the banking sector in the US between the too big to fail banks, sort of banks in between, and then everybody else, all the real hard work that makes the economy go is done by everybody else. JP Morgan doesn't really care about, factoring receivables for a local business because they are having trouble financing their working capital because their growth is too strong, right? They're actually looking at people like that as an opportunity to squeeze. Whereas, we have a banker and she has a name and we know her and we know her significant other and we meet about Doomberg as a business. And when we were about to launch, she heard our business plan and she came to our office and viscerally did her know your customer anti-money laundering obligations by understanding the timing, nature, and origins of the future cash flows of this new business that we had created, that she helped us create. That is such a critical lubricant in the economic gears of America. And it's just a fundamental fact. When deposits leave small banks, they stop lending. They have to.
Right.
And when small banks stop lending, the economy goes into what's known as credit crunch. And right now, we have a converging factor. We have a converging set of factors, I'm sorry. One, we've had this recent mini run on the banks. Silicon Valley Bank, Signature Bank, Silvergate, First Republic, a few others. Two, we had Janet Yellen beclown herself in front of Congress when asked, hey, are deposits in Oklahoma safe? Asked Senator Langford from Oklahoma, and she totally flubs the answer. Mm-hmm. But three, and Jim Bianca actually just put a great Twitter thread on this out this morning, which was really eye-opening. We have tax-paying season right now. And turns out that, during last week through the next week, banks experience a significant deposit outflow as people like us have to pay our taxes. You make your estimated taxes for the year, then you file your extension on tax day because you have, your LLCs aren't all lined up and you have to make an estimate for how much taxes you owe, and then you write a big check, and you usually write a check slightly bigger than what you owe so that you can get a small refund in a few months or a few weeks when you file your final returns, and you don't have to pay a penalty. There's going to be huge outflow of deposits from small and regional banks, community and regional banks in the next, in the past week and the next few weeks. And this could feed a temporary credit crunch. And, when banks stop lending, the economy stops growing. And so we would be concerned about access to credit for small businesses in flyover country, because neither the big banks nor the national media cares about flyover country until it's too late. And we live in flyover country. We are immersed in this culture. We understand how the construction company, needs to prepay for materials and all that stuff. And that's actually, 50, 60, 70% of the actual economy. The too big to fail banks make money because they're too big to fail. So it's just that simple. And the small regional community banks need to make money by growing deposits and lending shrewdly. And that is actually the economy. The too big to fail banks aren't the economy. The derivatives books and the counterparty risk and the, prop desk insider, that's not the economy. That's moving money around, hoping to pilfer money from retail investors. The economy is our banker who lends to the son who inherited his plumbing business and wants to buy 3 new vans and hire 4 new employees to double his business because he thinks he has a competitive advantage over the competitor across town. That's the economy. That's capitalism. That's an entrepreneur taking a risk, leaning on the bank for some help and succeeding, and the bank getting their money back with interest, and that, plumber getting the excess equity that they've earned, literally earned, working 80 hours a week, making their business run. And so our biggest thing, the key thing that keeps us up at night right now is deposit outflows out of small banks in the US. And it has a certain subprime is contained feel to it. If we go back to sort of '08, but probably not to that degree, but a very similar feel where it was like, subprime is a small part of the housing market and housing prices only ever go up. These small community regional banks don't really matter and the big banks can just fill the void. No, they can't, and they won't. And so this is really, from an economics perspective, the thing we're watching most closely.
And you brought up that you felt like the general market is not necessarily fully appreciating that fact. What leads you to believe that? Just that you're not seeing the movement that you would expect based on that information, or something else?
Yeah, I think the sort of S&P earnings estimates and so on that, I mean, who knows whether that actually moves markets. I suppose markets are mostly, moved by flow at these points, flows into, into passive investment vehicles and so on. But by and large, we still believe that ultimately the price of equity should reflect the present and future value of earnings and cash flows and dividends and buybacks. And to the extent that the market might be overestimating the strength of the economy in the back half of the year, then you would expect that there would be a little more bearishness in the markets than we see today. Having said all of that, we're not good traders, and everybody listening should understand that. So.
And did you see, I'm sure you know, right? Banks are reporting right now, and a lot of them actually beat on their previous release. Does that factor, and that's the big banks, to be very clear. I'm curious how that factors in.
That confirms my fears.
Exactly. Okay, that's what I was figuring.
Yeah, because this is a zero-sum game. So if the big banks are outperforming, who's underperforming?
Right.
Right. Again, big banks exceeding earnings expectation is consistent with, again, we're not making a bearish call.
Sure.
We have, and it's Doomberg, nobody comes to us for the rosy, optimistic outlook. But if you're asking me where I would be concerned and what milestones I would be tracking, the weekly reports out of the Fed about deposits at small and regional community banks is one that we're looking at. And by the way, concurrent with that, we have a pro tier where we have sort of elite subscribers who get a full Zoom webinar once a month with usually a presentation from us or a high profile guest. And the key part of that is they get open Q&A, like direct Q&A with us and the guest. And on the last Fed day, we had Danielle DiMartino Booth on, and she gave a really staggering 30-minute presentation going into all these details. And one of the big challenges is commercial real estate. 55% of commercial real estate loans are underwritten by small regional community banks. And nobody's going back to work, right? I mean, these office buildings are empty. Nobody's going back to the office. People are still working. Nobody's going back to the office. And you combine deposit outflow with bad loans, and suddenly you can begin to see, the genesis of a potential crisis. And truly, the market is just sort of pricing in that the Fed has everybody's back. And look, that's been a very good trade, and it probably is true that the Fed still does have everybody's back. But it's something we're looking at for sure.
Yeah, you mentioned something earlier that I actually talk a lot about, specifically from a trading perspective, which is pattern recognition. It's really well documented. It is a super important aspect for long-term successful traders. Obviously, you're finding that to be important also in just the world of economics. If you're thinking about the perspective of a retail trader, what are some of the key pattern pieces that you think they should start paying attention to in general, if they're not already?
Yeah, tough question, because retail trading is hard to make, hard to beat the market as a retail trader, as you know. And so our advice to retail traders is don't trade until you've paper traded for a long time and really understood what makes it work. But even then, there's something viscerally different emotionally about having your own money on the line. And then that sort of runs counter to what I was just saying. But if I were given a fixed amount of money to trade, and I had to, it's not something I would like to do, I would actually become deeply knowledgeable about a very small subset of the market.
Right.
And I would go deep, and I would trade 3 or 4 stocks maximum. And I would know their industries. I would know what they mean when they put out press releases. I would know what they mean when they say certain things on earnings calls, or, for example, if you had a pure play in a very narrow commodity, and then you subscribe to the industry magazine or rag that gives you the weekly prices for the market, and you could beat the market knowing that prices are taking a dip and you could go short that thing. Or you could see that there's bullishness indicators because, one of their competitors went offline and they're running at full capacity and they have pricing power and the market hasn't yet realized that. If you get a fundamental edge and then use some technicals to support your entry and exits, that's sort of the classic way to do it. And that's what I would advise. Like I would become deeply knowledgeable around 3 or 4 companies. And I wouldn't, I would keep an eye on the broader macro just to understand sort of the tide. But I would trade the same stock over and over and over again. That's actually what I would do.
So keying into that though, and I'm specifically curious about the economics side, just because that's kind of where your eminence is. So you mentioned at the end there that, you would keep an eye on the economic tide. How would you do that?
So let's take an example right now, crypto. And we've written about Operation Choke Point 2.0, which is tied to this banking crisis. It's not surprising that 3 of the banks that failed either were directly or indirectly heavily associated with the crypto industry and the epic mania in private markets venture capital. That's a huge headwind for any crypto-related stock. And so you might say at the highest level, I am bearish all things crypto. And so I will be opportunistically seeking rallies to short, and dips to cover. And I would say, wow, Bitcoin just went up 2,000 points. And just take, for example, like Gary Gensler has made it very clear what he's going to do. It's all there, like the writing's on the wall. Like he just charged this Bittrex exchange yesterday. You could read the 80-page report yourself. We did. We know what he's doing. And so we know what that might, what it should mean, certain stocks in the public market. And you can then say to yourself, I have a bearish fundamental tailwind if I'm going to go puts or I'm going to short a stock. And then you have to watch the trade action. And you can say, wow, this thing, Tesla's ramping today. And that means a lot of the sort of meme-ish type stocks are ramping, and this thing that I've been watching and thinking about shorting just is up 4.5% on no news that doesn't make any sense. And Gary Gensler is testifying today before Congress, and I read his testimony and nothing changed. I'm going to go ahead and short that stock today. And then you have your entry and your exit and your own discipline, and everyone I'm sure you think about discipline all the time. And that's the way that we would look at it. But then you have to be very careful to say, okay, what are the milestones that would make me pivot from being bearish the sector to the longer bearish? And then you have to stop trading through that framework immediately. And it might be 2 consecutive trades that don't work. Pick your favorite rule. The thing about trading, again, don't take advice from me on trading, but I've certainly read a lot about it, tried my hand at it a few times, had some successes, had some failures. Is really it is literally just a discipline game. You have your rules, and the greatest indicator of success for a trader is the discipline with which they follow their rules. It's not even actually what the rules say, because the reason why traders lose is because of emotion. And so as long as you have a set of rules that you are very disciplined about keeping, look, you can't say my rule is I put 50% of my account into every trade, but you have to have a pretty reasonable, as long as you have a reasonable set of rules. The thing that differentiates good traders from below average traders is the discipline and the lack of emotion in executing that discipline around those rules.
Yeah, completely agree. Yeah, at first when you were saying about the discipline, I was kind of half agreeing, half disagreeing with you. But then as soon as you added the caveat on having rules that provide positive edge, completely agree. Yeah, 100%.
Yeah. And by the way, experiment to develop such a set of rules with small stakes so that you keep your bankroll. Until you're a really good card counter at the blackjack table, you shouldn't be betting large. But the moment you convince yourself that you could count cards and the casino won't figure it out, well, when the odds are in your favor, then you could raise your stakes. Bankroll management alongside a good set of rules is absolutely critical to staying in the game. It's funny, as you're talking, I'm seeing behind you, you have 2 books, Options as a Strategic Investment and Supple Leopard. And I might be the first guest to be a proud owner of both of those books.
Oh, really?
Yes.
Dr. Kelly Starrett?
Supple Leopard, yeah. That's
So
I could tell by your physique that you're a power lifter. I'm a closet power lifter, and
awesome.
I will say that I have a relative to my weight, I have a exceptionally strong deadlift. That's my specialty. But anyway, I digress.
Wait, is it sumo or conventional? We have to get that out of the way.
Oh, I do. My favorite deadlift is the hex bar
Oh,
because
interesting.
that
So like a
relies
trap.
far more on the
Yeah.
legs
Yeah.
than the back. So I love the
Okay.
hex bar. Yeah.
Okay. That's
I
it. That's
at my
interesting.
peak,
Yeah.
I deadlifted 2.5 times my body weight.
Good. Yeah. That's really good. Yeah. I think
Anyway, I
it's
digress.
no, I welcome it openly because I actually I'm a huge proponent of fitness in general, not just like physical, but mental fitness. And this is probably one of my most gifted books, Becoming a Supple Leopard. I give probably 30 to 50 copies of that out a year. And it's because it's like I genuinely think it's transformative. So I actually think it's super, super dope that you're familiar with
Yeah, I will say
Achilles tendon.
I implemented a pretty significant project around a birthday milestone, and that book was part of my, I set a very strong goal, and I just broke it down into small parts, and that book and a few others really helped me achieve that goal, and it was sort of a crazy goal, a stupid goal, but I managed to do it, and so I really did enjoy that book, which is why I've seen it since we started talking, and I was waiting for my opportunity to bring it up. But I also own the book on top of it, Options as a Strategic Investment, because I have a good feel for numbers and love trading options, even though, I have a good friend, Tony Greer, who runs TG Macro, and he says, when you're thinking about putting an options trade on, slam your hand in a drawer and then think about it again. So he doesn't believe in trading options, and he's a good friend of mine. We like to joke. I predominantly don't trade. I invest privately, but I do have a nickel slots account where occasionally I will head to the head to the ponies and make a few bets, and I still enjoy it. So.
Yeah. And I actually think keeping a side of that is still good, man, because even if it's low probability, but still asymmetric risk, every once in a while it does pay out. Like you said, right? A very small subset of a bankroll. But I do think there's a time and place.
It's a de minimis amount relative to my personal net worth, but it is still, it in ways, it's almost more fun than, the big bets that pay off in the private world. I have a couple of friends that I do it with, and we just sort of get to dunk on each other when the trades don't go well, or when they do for us. And so it's just kind of fun. It's good to have a little skin in the game, and just it's like watching football and placing a few side bets on Sunday. I mean, who doesn't like to do that? So.
Well, I hate watching football. If I can get you on a rugby, that would be my go-to. But I get your point.
Only if I can gamble on it.
Oh yeah, you can gamble on rugby all over the place. They're degenerates. It's actually funny though that you talk. The more I listen to you talk, the more I find a lot of just general common themes from the concepts of stoicism that you mentioned up front. Definitely noticed that littered throughout. You talked about taking a big problem and chunking it into small problems. We do that in the Marine Corps literally all of the time. We have the saying, how do you eat an elephant? One bite at a time. And then you're also into physical fitness, which I find fascinating because I actually think there's a huge correlation between a human being's discipline, as you mentioned, and just their overall impact on life, not just how good they are as a trader or how good they are as an economist or a business owner, but just literally in life. What is kind of your guiding feature? Obviously, in terms of business, you like what you do. Is there a broader impact that you're trying to make as Doomberg, the brand, or as an individual within Doomberg? I'm curious how you think literally about life large.
Yeah. So, obviously, married, 2 kids, love my family deeply, love my business partners and their family. So I'm a big believer that, success starts in the home, and take care of your stuff. I once said something in Greer's Slack, Tony Greer's Slack, that pride of ownership is a foundational attribute of a responsible provider. So if you come to my house and you look around my yard, there's a lot of right angles and well-cut grass. And if there's a paint chip, it gets taken care of. And if a branch falls out of a tree onto my driveway, it gets picked up. Like the precise and proper amount of pieces of garbage on my property is 0. And I don't care where you are on the economic ladder, pride of ownership is free. And it starts at home. So, personal preparedness, taking care of my kids. Straight teeth and an education is my commitment to them.
Mm.
And they'll get both of those things before they leave my home, and they will have lifelong allies and support between me and my spouse. And then it goes out from there. Like I will take care of my friends and family first, and then charitable giving beyond that, and helping others. And one of the big ethoses of Doomberg is we help every content creator who asks us. And I do countless Zoom calls one-on-one with aspiring or existing content creators who want to run their businesses better or try to pick our brain, and vice versa. By the way, we learn from all of them as well, which is a great way. We firmly believe that the NPV of giving is infinite. So, there will be lots of people who take advantage of your time and never pay you back, and that's perfectly fine, because all it takes is one along the way that is as transformative as that hedge fund manager who took my call at the depths of our COVID crisis and gave us a really critically important piece of advice that changed our lives. Like if 30 people that we helped ignore us when we truly need it, all it takes is that one person to give you that sort of pivot point in your life, and you have to then be prepared to take advantage of it. And one of our favorite phrases, which comes back to your physical fitness comment, Vince Lombardi, find out what the price is and pay it. Like I'm a firm believer that if you have a reasonable goal and you break it down to 1,000 pieces of the elephant, and you can isolate all the other variables except your effort, then there's no excuse but your own inability to work hard enough to get there. And many people actually, well, not to get too philosophical, but this is a great conversation. We're going down various rabbit holes here.
Yes.
Most people don't want to actually do their very best at anything. No. Because if they do their very best and they don't succeed, then they will have nothing other than themselves to blame for their failure. So they proactively look for cop-outs, excuses, and reasons why the outside world created a set of conditions that caused them to not succeed. And we would call that loser talk. I mean, to be totally blunt, like winners win, winners go and get it. Like you don't get to be in the Marine Corps unless you're a winner. Like you gotta go and get it. Right. And you're not going to carve out a life as a successful trader if you're always railing about how the market is wrong. Right. And so when I was in the sort of the corporate world and we were looking to hire, we had a very strong philosophy: winners win. Let's look for signs of winning on the resume, not signs of pedigree, although there is an aspect of pedigree that matters, but signs of winning. And the number one sign of winning is what I would sort of call that curve. What did you do with the opportunities and when they were given to you at various stages of your career, right? I don't care where you started. What did you do where you started? And did you parlay that into another opportunity? So you may have enlisted in the Army and then, I don't know how it works in the military, but you go and try to get into the Marine Corps, and then you do. And then when you're in the Marine Corps, you climb up the ladder quickly and suddenly you become, very high up in the pecking order, and like that's a winner. Like when given an opportunity, you nailed it. And if you have a consistent track record of nailing the opportunities you have, the absolute place where you are doesn't matter as much as the vector. And if the vector is upward forcing, and give me an engine, and you can do wonders with a team full of people with a high motor. And so we have a very small team. We've not expanded. We've not grown. We've spent nothing creating Doomberg. We've on purpose run a very tight discipline. We spend zero on customer acquisition. We've spent a shockingly small amount of money building Doomberg. It's all sweat equity. And we have resisted the temptation to build a big team, to outsource a bunch of work. We want to live, eat, breathe, sleep, viscerally feel every aspect of this business, stop doing almost everything else in our life. And we've just pounded it. And like when you catch a tiger by the tail, you keep going. Like, you just keep going. Wake up, show up, make the number go up, and repeat. That's our motto. We attack it with discipline, like a supple leopard. And that book had a big impact on me, and it's true. Like, and very few people have that. Far more people have the desire to find an excuse than they have the willingness to lay it all out there. Like if you're not, like if you do your best, you will define what your best is not, and you best be prepared for understanding. Like, let's say I studied my ass off for a math test when I was in school, and the kid next to me beat me by 3 percentage points. Two things happened. I found out that that kid is better than me at math, which is irrelevant. I did my very best on this math test and set myself up personally for the absolute maximum success in life. So our belief is absolute measurements are the one that matter, not relative ones. So my personal deadlift record pales in comparison to yours. I could tell just by looking at you compared to looking at me. But for me, that was the very best I could do. And I did it. And I set a goal. I broke it down. I laid it all on the line. There's not 5 people in the world that cared that I hit that milestone. I cared because it meant something to me and I did it. And that's the framework. That's the mentality. And I do believe that comes through in our writing, in our professionalism, in our marketing, and our subscribers appreciate it and they're inspired by it. And we've been very honest with our subscribers from the beginning 2 years ago that we intended to make this a business that transformed our lives. And we invited them to be part of that journey with us. And I think that has been a real important input into our success.
Yeah, it's huge. And I'm a big fan of your guys' writing because there's a lot of writing that I see that it's difficult for me to read. A lot of times there's a lot of baked in agenda, or there's just a lot of fluff. It's just words that probably don't need to be there, that consume space, and it takes time to read. And admittedly, as the consumer, it can be annoying. It can just be laborious. But I notice with your guys's articles, I don't get that sensation. Like, they're obviously very well written pieces, and just about everything in there has a reason for being in there in terms of telling a full story. When you, oh, sorry, go ahead.
No, go ahead. Finish it.
I was going to ask, when you're writing about current day events, like we're seeing, day over day, a lot of these things have immense complexity. How do you strike a balance between writing a piece that is descriptive enough and has enough supporting information to give a good, solid understanding, but you don't go so far that you're explaining every single thing you mentioned so that it becomes an unreadable piece? How do you find that balance?
Yeah. So great question. Back to our brand ambition. And this is really important. So there's sort of 2 factors: our brand ambition and the fact that we have a person who is the editor that is a complete and separate and distinct role from the writer. And editing is not proofreading. Editing is editing. And that editor is actually really fits the descriptor of our ideal client. So not a technical background, but a finance background, but pretty, obviously brilliant and literally our ideal client. And so if we can write in a way that our editor gets it, then our ideal client probably gets it. But back to the brand. Our brand ambition, and our brand is nothing more than the gut feeling you induce in your ideal clients when they interact with your product. We created Doomberg with the following brand ambition. When our email shows up in Erik's inbox, the gut feeling we induce in Erik is, ooh, I get to read that. Not, I have to read that, I should read that, or that might be interesting, but I'll get to it, I'll print it out, and then I'll never read it, and it goes in the garbage at the end of the week when I clean my desk. I get to read that. So how do we do that? We broke that down into 3 brand ambitions, and the third of them hits to your question. The first is, we shall be provocative without being polarizing. Nobody wants milquetoast, but nobody wants, well, we didn't want to be just an outrage engagement machine, okay? 2, we shall be funny without being silly. Our pieces should entertain you. You should smirk. You should get the inside jokes of our captions on our pictures. And, like there's a lot of embedded fun inside jokes in our pieces that our longtime readers get, which drives huge engagement and stickiness. And that's the most important parameter for a subscription business. And then third, to your point, we shall teach without being self-indulgent. And our editor, being the manifestation of one of our ideal clients, is the ultimate arbiter in, this is too much, let's cut that. This needs to be pulled out a little more because you're assuming too much in the reader. And we desperately try to strike that exact balance that you just described. Our ideal readers are financially sophisticated, highly educated financial professionals that have succeeded in life, that pride themselves on their ability to understand complexity, but like to laugh, like to learn, like to be educated, and like to feel part of something. And we try to give that to our ideal clients with every piece. And so, like in the piece we published this morning about Saudi Arabia and the rupture with the US and prospects for peace in the Middle East and what that might mean for the BRIC countries and the US dollar and the price of oil in the future, there was a lot of stuff that didn't make it that I had in it when I first handed it over for edit. And one of the most important things we did very early on in Doomberg, around piece 20 or piece 30, is we decided that we would have a full day for editing before we publish a piece. So when we are going through our timeline for the week right now, I have a mental target to get the next piece done by Wednesday for a Friday morning publication, which gives the editor a full day to rip apart. And we do, I mean, by the way, once it goes to the editor, it's out of my hands. Like, we have a work process, and we have, operations, one of our 5 pillars to our business. And we have a very systematic 30-point checklist for each piece. What's the title? What's the quote? What's the outline? What's the one sentence summary of each paragraph? What are the charts? What are the photoshops? What's the thumbnail? What's the social preview? First draft, second draft, third draft, hand it off to edit. First edit, second edit, third edit. Post it, send it to a few of our friends to make sure there's no glaring typos. And even still, despite all of that, we had a typo in the piece this morning, which makes you want to shoot yourself, jokingly internally. But the point is, like, that level of professionalism is what our audience comes to expect. And we have, as an editor, which is a critical role. If you're going to be a writer without an editor and you're just getting your stuff proofread, you're not actually operating at the highest plane possible. You need a brilliant editor who has the courage to tell you what's bullshit, and to tell you what needs to go, and to tell you what's missing, and to say, this is self-indulgent. It doesn't teach you self-indulgent. Stop. You don't need to bring Erik all the way here. Erik's smart. He gets it. You can stop right here. And we do that. It's one of the 3 brand pillars, is how do we make sure we're bringing just enough along? And, sometimes if you talk over the head of your reader, that's okay, because they'll go back and they'll do the research and they'll want to learn and they'll understand it and they'll get it and they'll have new respect for you because of where you're operating out of, and they want to join you, right? Like, that's part of learning. You don't just feed everybody everything. And so it's okay to talk a little bit in code and to refer to things that they might not know, but it doesn't take from the context. The essence of the message still comes through. And so that's the real key, we believe, to a perfect Doomberg piece. A perfect Doomberg piece teaches you something you didn't know, makes you laugh, and then leaves you with a feeling that, wow, I'm glad I read that. And that speaks to piece length. It speaks to paragraph length. It speaks to word sophistication. There's lots of things that go into being a great writer. It's not just writing long and fancy words that people don't understand, but they have to pick up a dictionary to go and see what the meaning is. And I'll leave you with one final point. One of our phrases is, anybody can say a lot with a lot of words. It takes talent to say a lot with few words. And we pride ourselves on the density of our pieces, recognizing that people's attention spans are shrinking. They're busy. We respect their time. They might only read the first third. If we don't capture them, they're not going to read the rest of it. We want them to read all the way through it. And so we think about that all the time. It's great that you asked that question, because this is really, really a key element of our operational plan.
I love it. Yeah, it reminds me of Leonardo da Vinci. One of my favorite quotes of his is, simplicity is the ultimate sophistication. And I actually really subscribe to that concept. Even in my trading,
100%.
People ask like what I do for trading, and they expect I'm actually primarily a derivatives trader, and they expect, since I trade options or futures, that I'm always deploying these really sophisticated, elegant, crazy strategies. And I explain, I'm like, most of what I do is boring as fuck. It is super simple concepts that I've honed over 16 years, and that is exactly why they work. So I actually really like that you guys think about it that way. Another thing I wanted to ask you is, there's 2 big things that we're seeing a lot of conversation around right now. There's kind of the US dollar potentially falling from grace as the global reserve currency, lots of news about that. And then also kind of these new conversations with OPEC plus, oil production. Out of those 2 stories, what's the bigger story in your view?
Yeah, I think the de-dollarization risk is vastly exaggerated. I do think there's a possibility of partitioning the globe into, regions where the dollar still dominates and where alternative currencies begin to get more market share in certain regions. And for the average listener, that partitioning is going to be irrelevant to you because you live in the dollar world. And, our investment philosophies, we earn in fiat, we save in real assets, and we invest privately. Well, that fiat that we earn in is the US dollar. And I've said, even though we're gold bugs and we have many gold bugs amongst our subscribers, if the US government came out tomorrow and made private ownership of gold illegal, we would be turning in our gold because we are law-abiding citizens of the United States. We operate within the construct of the law, and we have families and reputations and good livelihoods that we'd like to protect. And we're not going to make a death stand on the altar of gold. No asset is worth that for us. And so for the vast majority of your listeners, the de-dollarization stuff is interesting. We're watching it. Far more relevant is OPEC Plus and their market share in the oil sector and their ability to affect prices, which is the subject of the piece this morning, and how China is sort of taking the place of the United States in the Middle East. They're far more likely that a world would exist where, because of the ESG movement in the Western world, oil production and capital investments are nowhere near what they should be. OPEC gets control over the market pricing power, and they use it because historically they already have. The era of $100 oil, regardless of the economic, recession / expansion macro analysis that you might want, where the floor price of oil might be $100, that's far more relevant to the average listener of this podcast than the de-dollarization phenomenon. And we could be wrong. There's no question that the U.S. dollar is still very dominant. It's going to take a lot more than what we're seeing in the news flow now for the dollar to be meaningfully dethroned from its position, especially if your benchmark is an average U.S. citizen listening to this podcast who only has ever operated in U.S. dollars. This is, to me, OPEC Plus's potential control over the energy markets is far more impactful in the short to medium term than the de-dollarization phenomenon.
It's so fascinating to listen to, because you and I have never talked before, but a lot of the way you view things, I find, is it's very similar to the way that in my layman's world, much less sophisticated of a approach than you, but I come to similar conclusions. Another kind of dovetail question, specifically off of China. I'm still in the Marine Corps Reserves, so I still follow kind of geopolitics pretty closely and whatnot. And the Silk Road in general, and just China's expansion policy, essentially infrastructure expansion policy, has been like really effective. Do you think that continues? I don't know if you guys go that far into that side of things. It sounds like you might at least touch it, but I'm curious your thoughts on that.
Yeah, I'd recommend listeners and viewers buy a book called Confessions of an Economic Hitman. And I'll pull up the book and get the author's name, who escapes me right now while I'm talking to you. But the playbook that China's running right now is essentially the same playbook that the U.S. ran in the post-World War II era. This is sort of what happens as sort of the new global superpower begins to ascend. And the old one, in the case, when we were ascending, the British, John Perkins is the author of the book, Confessions of an Economic Hitman. And so that's a really fantastic book. And if you just take that book and then apply it to China today, it really is a great framework for understanding their motivations. And I believe you probably meant to say the Belt and Road Initiative.
Sorry.
Which is the big, the Chinese macro policy of gaining favor with developing economies by providing capital and expertise to help them build out infrastructure. And this is what John Perkins would say is sort of being an economic hitman. And of course, there's a price to be paid for doing that, which usually involves, subordinating your economic policy and foreign policy to the whims of the Chinese in this case. But look, they're being very shrewd about it. They're being very strategic about it. One of the big challenges that I see in the Western discourse is a constant underestimation of the enemy, so to speak, right? And in the Marine Corps, I'm sure they don't teach you to assume that the person on the other side of the battlefield is weak, dumb, and incapable of fighting back at the highest level. You prepare for the ultimate athlete on the other side of you, and your objective is to be that much better than the person that you're about to confront. And why it is that we, I'll give you an example. Like when we sanctioned Russia after Putin's foolish invasion of the Ukraine, we came out with a piece called On the Cusp of an Economic Singularity, where we began to call days after these came out that this is probably not going to work. It's probably going to backfire on us. Here's a way to actually hurt the revenue of Putin, which is to not focus on choking up their supply, but to swamp him with supply, which is how you drive down price in a commodity market and thus kill profits. And yet, by sanctioning his supply, we drove the economic cost of oil and gas to nosebleed heights, and there was no amount of supply we could choke off that couldn't be made up on price. And
Right.
this was all very clear. We wrote it, and we got crushed. Like everyone, oh, you're basically, we got accused of being unpatriotic. When in fact, we were trying to lay out an alternative blueprint to actually obtain the objectives that are stated, and
Right.
so I don't know why it is that we have this, the perfect example is Peter Zeihan, who's an analyst that we enjoy, and we have obviously very different views, but he was saying that, Russia has no technology to keep their oil and gas fields running. And look, I manage global teams of technologists around the world. I lectured at Chinese and Indian universities. I know the state of the Chinese and the Indian technology sector, especially in the oil and gas space, which is critically important to them. And the combination of Russia, China, and India is going to be more than capable of offsetting the quote unquote Western technology and all of the arrogance that phrase has embedded in it. And people were saying at the onset of the sanctions that this was going to cripple, oil and gas production, and it would go to zero, and this would bankrupt Putin, and all of that was utter nonsense. And pointing that out was basically called, unpatriotic, when in reality, I would call it realistic. Don't underestimate the enemy, overestimate the enemy, and be happy when you have done so. It was kind of a much, much, much better way to attack a battlefield. And so that's sort of, when I watch what China's doing, I don't ascribe evil intent to it. It's just they're solving for themselves. They're optimizing for themselves. You should assume that that's what your geopolitical adversaries will do, right? Think like them. Where is it in, in The Art of War? Where is it in that book? Does it say, hand all the leverage to your opponents and then bemoan the fact when they use it? This is not how war is won. And so it's fascinating to see. But that's sort of my answer to that question.
Side note on the Art of War, that's actually what's underneath the saber-tooth cat skull right there. Nice. Is the Art of War. It's interesting. I'm actually really fascinated that you guys had blowback like that from that kind of piece. I find people sometimes can become a little too segmented in their thoughts, because the other thing that I like to remind people about with China is that they're a long-term country, right? They're big and they're old, real old, but they're making, at least as far as my, again, very drastically uneducated opinion goes, what I'm seeing, it's long-term initiatives that they're expecting to cash in on 50 years from now, maybe less, but they're setting kind of a much larger footprint. And sometimes I feel like that escapes the near-term focus, at least the perceived near-term focus that I have of the US. I question sometimes the way that we do things, but to your point, it's not because I don't love the US, and it's not because I don't love my country. Obviously, it's the inverse. It's because I'm concerned.
Yeah, so I would say that your strength is your weakness. And so the Chinese ability to think long-term flows in part from the fact that they run a very disciplined and violent dictatorship. And so they can think in 10 or 20 or 30 years because they don't have to face the populace. And that has its strengths, i.e. they can think long-term, and it has its weaknesses, which means their internal economy has far less dynamic elements to it in the way that the U.S. economy does and more capitalistic economies do. And our strength, being a relatively dynamic capital market system, is also our weakness, because our political leaders are forced to be held to shorter and shorter short-term measures. And so this is not an attribute that is derived to sort of race or to being Chinese or being American. I think this is a consequence of the political and economic systems that these two countries have separately, through their own unique history, have arrived at. And so the American system and the Chinese system should be compared, not the sort of Chinese people and the American people, because we're all products of the system that we are born and raised in, of course.
Yeah. Yeah, I got to be honest. I literally could talk your ear off easily for another hour. Yeah, I find not just the economic wisdom and just the market wisdom that you have in the wealth of experience, but just the way that you think about the world to me is fascinating, and it's really fun to explore. So, um, first, thank you so much for spending some time with us here. I definitely would love to have you back on. But before we sign off here, how can people get a hold of you?
Yeah, so before doing that, I would say the best way for us to spend another hour is to come back in a month or 2 months or 3 months and do it again. So happy to do it. I enjoyed the conversation as well. So let's go ahead and put it on the schedule to do it again.
Sure.
And the way people can find us is look, the work of my life is at doomberg.substack.com. All of our pieces can be found there. You can sign up for free, and the free subscribers get sort of the first third of all of our pieces, which we write in a way that we hope to induce you to subscribe. In full disclosure, we're in the, our subscribers are the lifeblood of our business. We run this as a business. You can also follow us on Twitter at Doomberg T. T is in Twitter. And more recently, Substack released a sort of Twitter alternative called Notes, and we're spending more of our time on Substack Notes because Substack is our business partner in this endeavor, and we couldn't have succeeded without their great platform. And so those are the three places: at Doomberg T on Twitter, on Substack Notes as Doomberg, and then Doomberg.substack.com is Doomberg.substack.com is the primary outlet for all of our work. That's where we'd love people to go, because ultimately you can skip all of the sort of impression phase and get to the engagement and email phase and join our subscriber army. Paying subscribers to Doomberg get all of our pieces and get access to the comments section, which is very vibrant, and we're very active in the comments to the extent that we can be, given our small team. And so, yeah, that's where we are. And look, Erik, this was really fantastic. And I really appreciate the conversation as well, and looking forward to coming back.
Yeah, absolute pleasure. And then for everybody, I'll throw the links to all of that in the show notes below. But until next time, we'll catch you guys later. Be an outlier.